All right, good evening, everybody. It is November 6th, 2022. It is a Sunday night here in Brickell, Miami, Florida. Hopefully you all are well. It is going to be an extremely busy week on Wall Street. We are going to be getting some key inflation data, which we'll talk about. We are also going to have a massive amount of corporate earnings, especially as it relates to the oil and gas sector. However, on Monday, it kicks off with Activation Blizzard and Take-Two Interactive, which are two very large video gaming companies, but also I think the number one company I'm going to be looking out for, and which we will cover, is Diamondback Energy. Now, the Federal Reserve is also going to report on consumer credit data for September. And if we think about what happened in August, total consumer debt rose to a seasonally adjusted annual rate of 8.3% to a record of $4.68 trillion. So I think we're going to hit an all-time record high again, because if we think about the environment we just came off of, we had artificially low interest rates, encouraging consumers to take on more and more debt. And I think one of the theses that I have is, as inflation has been raging, we've since come down a little bit. We've roughly had about 8.5% inflation here in the United States. People are starting to put more normal expenses on credit cards in order to relieve a little bit of the pain that they're seeing from inflation. Maybe they don't have the money to pay everything up front, so they start to acquire more debt. But here's the problem with that. Now, in my opinion, I think in times of rising interest rates, especially when the Fed last week just raised the Fed funds rate again, 75 basis points, you really want to be paying down your high interest debt, such as credit cards, because as the Fed raises interest rates, if you're only paying your minimum payment on your credit card, what you'll find is that your minimum payments are probably going up due to interest rates going up. So just be cognizant of that. Speaking of inflation, Thursday, November 10th, 2022 is when we are going to be getting the CPI data, okay? And here's why this is so critical. Obviously, we heard from the Federal Reserve last week. They did authorize a 75 basis point rate hike. However, Fed Chairman Jerome Powell did signify that in December. So the December rate hike may be less than 75 basis points. It may be 50 basis points. But I don't think that matters so much as the duration of these hikes, because this is something interesting that Fed Chairman Jerome Powell said, and I'd like to read you guys this quote. He said, "Incoming data since our last meeting suggests that the ultimate level of interest rates will be higher than previously expected." So if we think about where the Fed funds rate is right now, it's roughly about 3.75% to 4%. So even if we do get a 50 basis point rate hike in December, which is lower than the 75 basis point rate hike, we're probably going to be right around 5% in Q1 of 2023. But if we get a CPI reading on Thursday that's hotter than many economists expect, I think the Fed is going to have no choice but to raise interest rates by 75 basis points again, because if they go down to, let's say, 50 or 25 basis points, that could be signaling a false signal to the market, and potentially markets could rally, which Fed Chairman Jerome Powell doesn't want. Okay, quick public service announcement. Tomorrow, which is Monday, November 7th, we will not be having a live stream, okay? Actually, there's about a 70% chance we may not be having a live stream. And the reason for that is because I will be attending the economic conference, here in Miami. It is called A Conversation with Ken Griffin and Mayor Francis Suarez, and that is put on by the Economic Club of Miami. So I will be in attendance. So if anybody's watching the live stream that is here in Miami, maybe you are a part of the Economic Club of Miami and you will be in attendance, please shoot me an email, because I will be there as well. And I think it's going to be a really good opportunity to hear one of the greatest hedge fund managers of all time, the most successful hedge fund managers, speak. So without further ado, let's get started on the live stream. We are going to be talking a lot about energy today. There's going to be a ton of oil companies and energy companies that are reporting earnings. And if you take a look at the XLE, which is the ETF that tracks the energy sector, so the Spiders ETF XLE, we're approaching an all-time record high. And if you look at a lot of the individual energy companies that you sort of see that make up the XLE, such as ExxonMobil, Chevron, they seem to be breaking out of almost a decade-long base from their 2014 top into all-time record highs. So we're going to talk about that. Also, crude oil futures are also getting a little bit of a bid right now. They're back at $91. If you look at the futures contract, ticker symbol CL, we're going to talk about that today. So a lot to talk about. So let me just close my computer and we will get started. I think tonight we are going to walk to downtown Miami, right near the 1000 Museum. All right, let's see who we have in the chat. Hopefully you guys had a fantastic weekend. I see Sunshine After Rain, the one and only Chris Beeman. Good to see you, Chris. I see Crypto Guy is here. Welcome, Crypto Guy. Always a pleasure. The one and only Tone Rick says, good evening, Tom and chat. Solo 401 is here. Good to see you, Solo. Welcome to Miami. Always a pleasure to have you here. My good friend Paul Greenwell is here. Says, hey, Tom. What's up, Paul? Welcome. Infinite Sky, Dutchman is here. Cindy Foley and Prince Ice. So we're starting off the live stream in the WeWork office at Brickell City Center. We are now going to be headed down, probably to the third floor. I think that is where the main sort of indoor-outdoor mall area is. And then we will get started. Hopefully you all had a good weekend. It's going to be a busy week. Oh, and I forgot. The number one thing that we need to talk about is midterm elections. Can you believe that? Midterm elections are already here. All right, let's see if we go out on the internet here. Good to see you, my friend. So this is the entrance to the WeWork. Now the main floor is on the 8th floor, but I think it also has 4 additional floors. I think lower, and then maybe the 12th floor, maybe, I think private offices. I'm not sure which companies. All right, so here we are at the Brickell City Center. Hey, Lila is here. Good to see you. Welcome, Lila. Pixel Logic, always a pleasure to have you here. Dan Zhang says, hey, Tom, have you seen the Meta layoff news? Yeah, Dan, I did see that. So I got a notification, Dan, earlier today that supposedly tomorrow is when Meta is going to start their mass layoffs, which is definitely not good news. Pixel Logic says, like the new indoor start of the live stream, Tom. Thank you so much. Appreciate it. Tahoe 814, good to see you. Thanks for joining. Austin City Limits is joining us. Always a pleasure to have you here. Now, this is an indoor-outdoor mall, so I think it looks like it just stopped raining. We have a nice view of the Paramount building in downtown Miami as well. I see British Gray is here, says good evening. Happy Sunday, Tom. Thank you so much. Gibson says good evening. Laura M says 81 degrees in North Carolina. Oh my God. That's like Miami weather. It was 81 degrees here all day. Beautiful day. Julia's here. Welcome, Julia. The LT Prod. Steve says greetings from Vancouver. Welcome. So everybody, a lot to talk about tonight. But I think the main thing is that this week in the United States, we have our midterm elections, which is going to be on Tuesday, November 8th. So it's going to be an extremely, extremely volatile week, I believe, on Wall Street. Now, as we sort of reviewed and talked about before, according to Tom Lee's Fundstrat research company, which is actually based in New York City, Manhattan, according to his data, the most favorable environment for the stock market tends to be when you have a Democrat as a president, which we have Joe Biden, but when you have the Republicans controlling both houses of Congress. So the quote unquote, I think, what are they calling it now? The red wave, something like that. Now, I'm not saying that's what I want. I'm not saying that's what I don't want. All I'm saying is, since this is a financial live stream podcast, I think it's very important to understand the most favorable outcomes, because the theory goes like this. If more Republicans are elected, there's probably not going to be any material changes to tax laws, tax codes, no new rules and regulations, because it would just be a gridlock, right? Republicans would fight with the Democrats, and since Joe Biden is a Democrat as a president, it's highly, highly unlikely that they would pass any sort of new legislation if it has to go through Republican leadership, Republican majority, if I should say that. So we're going to keep an eye out for that on Tuesday, but I think in terms of monetary policy, or what could influence monetary policy, we are going to get a very, very sought after and key piece of economic data on Thursday, and that is Thursday, November 10th. We are going to get the CPI report, or the Consumer Price Index. Now, as we all know, the traditional headline CPI number is inclusive of very volatile food and energy. However, what the Fed likes to look at the most is the core CPI. So core CPI strips out volatile food and energy prices. And if you think about it, you know, even though we are starting to see some deceleration here in the CPI, I'm very, very nervous to see crude oil start to creep up here again. Has anybody noticed that? So before I started the live stream, I was looking at crude oil futures. The contract ticker that I look at is ticker symbol CL. And we are now back over the 50-day moving average. And we are trading at $91. Now, to be fair, before we were, I think in March, we were at $130, traded all the way down to like 82, 83. And now we're back above 90, which is very concerning to me. Dutchman says, Tom, what's your take on the coming diesel shortage? So, and that's another thing. So Dutchman, I think the Biden administration sent out a memo, and they said that they plan to refill the strategic petroleum reserves at about $77 a barrel. Now, being an American, I want them to be able to do that. This is an interesting looking Jack Daniel's Christmas tree here. I want them to be able to do that, but I don't know if that's going to be possible, or they're going to get the opportunity, because as we just talked about, crude oil is rocking again, back above the 50-day at $90. Now, I was reading some articles. I think there was one article in the Wall Street Journal that was saying some places in the Carolinas, specifically in North Carolina, there's already a very noticeable shortage in diesel. Now, I haven't really been following it as closely as I should, but maybe somebody that's watching the stream in the Carolinas, or maybe anybody who has more insight, maybe you work in the oil and gas sector, that could provide all of us a little bit more clarity, or your take on the up and coming diesel shortage. I think that'd be most appreciated. War Walker is here. What's up, my friend? It's good to see you. We are here at South 7th Street. And supposedly, I think this is one of the oldest bars in America right here. Robert is here. Good to see you. Line Sync. U-Haul, welcome. Check it out. Says, is Mark doing layoffs due to the failed metaverse? Well, I think everybody is doing layoffs, right? So I think the main companies here that we heard that are doing, I would say, massive scale layoffs is probably number one is Lyft. I think they're laying off about 15% of their workforce. The biggest one, actually, besides Lyft, I would say the most controversial one, Twitter, laying off about 50% of their entire workforce. Now that is actually to be expected, right? Anytime you have new ownership or you go through a big merger or an acquisition, there tends to be some layoffs and some shedding there. But I think if we take a look, and we've been rolling through Q3 earnings season, we're about 87% of the way through all of the S&P 500 companies reporting earnings. Now, we've been covering this extensively on the channel. And from all of the conference calls that I've been on, the number one sort of common, I would say, speech pattern that has been spoken on these calls has been macro environment concerns. They're like, we are very concerned and we are either pulling forward guidance or reducing forward guidance. I mean, think about all of the companies that reported earnings, especially in the tech sector, that refused to give forward guidance altogether or pulled forward guidance. I think it's almost every single one of them, right? Amazon did the same thing, Microsoft. So when you're running up against an environment where you know interest rates are on a one-way trajectory higher, you're having customers not converting the way they should. So for example, Atlassian, which is an enterprise software company based out of Australia, the CEO, Michael Cannon-Brookes. Now, one of their main key metrics that they track very, very closely is the conversion from their free subscribers to paid subs. And also add-ons. You know, if you're an Atlassian customer, you probably use it for like DevOps tools, Jira, Confluence, things like that. And the more licenses you add, assuming the more people you're hiring, right? So if you have mass layoffs in the tech sector, that means less licenses of all of this key software. And I think you're gonna see continuous layoffs across the board. But to answer your question about Meta, in my opinion, and this is very, very opinionated, when it comes to Meta, the most concerning thing to me is that their capital expenditures are just totally off the charts. Now, the CFO of Meta actually came on the earnings call and said, even though, well, he didn't say exactly this, but I'll do a quick translation. Even though our spending was egregious this year, it's gonna get worse next year. I think their capital expenditures are gonna balloon to $101 billion. Now, granted, a lot of that expense is going to be on bringing new data centers online and also buying state-of-the-art servers and things like that. But I think they're just trying to cut costs or trim fat in any way they can. And I think it's not exclusive to Meta, but it's pretty much across the board. But I don't know, what do you guys think? Are you seeing in your day-to-day job, in your day-to-day life, any layoffs, anything like that? Hey, Dr. Long is here, the one and only Patrick, New York, our great moderator. Thank you for coming, Patrick. Digital Nuke says, what's up? Not too much. Glass of Beer 12 says, hey Tom, we are coming from Thailand. We love your channel and content. We are a day ahead of you. It's Monday, 8:55 a.m. I am going to buy some crypto. Is now a good time? Well, thank you for watching. I appreciate it. Now, I can't advise on if you should buy cryptocurrencies or not, or really I can't advise you on whether you should buy anything. But it is interesting, the price action in Bitcoin. I think we are finally above our 50-day moving average again. I think for the first time in a long time, Ethereum is actually leading Bitcoin. But thank you for watching, I appreciate it. Don't we have to set our clocks back or something like that this week or today? Elon Musk, Dutchman says, Tom, Elon Musk has decided to start charging $8 per month for a Twitter account. So I think that's half true, right? So the $8 a month doesn't necessarily apply to anybody. And we talked about this yesterday, but I think it's good to cover it again. It's a big news item. It only applies for people who want to have specific amount of perks or verification, right? So for example, if you want to get a blue check mark and verify your account, it's going to be $8 a month. And then you'll be able to post maybe long form video content. You'll be able to do, have your replies be lifted to the top of the comment section and things like that. So I don't think it's everybody is going to have to pay $8 a month, but I think some. It is a windy night out here, everybody, so I do apologize for the wind noise in advance. We do not have the microphone. Noodle says the insurance company I work for had layoffs, including tech layoffs. Oof. Yeah, I mean, so here's my prediction in relation to a lot of the financial companies and the big banks. I think we already had layoffs at Goldman Sachs, but I think the bank that's going to get hit the worst is probably Wells Fargo. And the reason why I say that, specifically Wells Fargo, is because they have the most exposure to the mortgage market, right? And if you think about where interest rates are today, specifically as it relates to, let's just talk about maybe if you want to refinance your mortgage, right? Now, why would you refinance if interest rates are 7%? And pretty much everybody over the last 10 years has a 30-year fixed below 5%. So you pretty much have 90% of that business going to zero overnight. So I would say anybody in the mortgage origination department is probably going to have a rough go about it. So I would be very nervous there, in my opinion. So maybe we should walk over to the Panorama building. This is the tallest residential apartment building in Miami, Florida. This one over here. Walking Minnesota says, I saw today that Wells Fargo mortgages are down 90% year over year. Yeah, I mean, it would make sense. I think wherever you saw that is probably 100% correct, right? I mean, just think about it. And I think that's why you're going to continue to see housing prices decline across the board too. If you think about it, a $450,000 house last year at a 3% interest rate, yeah, many people could afford that. You're probably looking at, if you put 20% down, you're probably looking at a $1,700 a month payment, right? However, with 7%, or I think it's even higher than 7%, according to bankrate.com, the average 30-year fixed rate mortgage right now, I think is 7.32%. You're looking at a double, 100% increase in your monthly payment before you factor in the taxes, before you even turn on the lights. So I think you're going to see, to your point, Walking Minnesota, mortgage demand crater, fall off a cliff, and home sales fall off a cliff, which they are already doing. And the next step is price declines, which I think we'll see more of next year. Sabrina Fair, good to see you. CeeLo is here. Good to see you, CeeLo. Always a pleasure. Sunshine after rain says beautiful view, Tom. Good to see you, Sunshine. Sparks Carnival says Ralph Lauren reports Thursday our luxury brands cushion are higher earning retail consumers still spending. This is Sparks Carnival. Yeah, I saw that too. So Ralph Lauren is reporting this week. And if I had to make a prediction, I think they're going to blow the doors off of their earnings report. And here's the reason why I say that. So to Sparks Carnival's point, we talked about, I think it was 2 weeks ago now. I can't believe how fast time flies. But 2 weeks ago, I think LVMH, Moet Hennessy, reported earnings. And they posted double-digit revenue gains across their entire suite of products. And they've made a unanimous decision to raise prices anywhere between 5 to 8% for next fiscal year. And you know who else did that? I think Hermes, if I'm pronouncing it correctly. I'm not a big luxury type guy, if you couldn't tell already. But they also had a fantastic quarter, and they are also raising their prices about 8% for next year. And if you listen to the earnings conference call, and I would highly, highly suggest you do that, if you go to LVMH's investor relations page, you'll actually be able to listen to the earnings call or the replay of the earnings call. And it was very, very positive, and they see no material drop in demand at all. So I think you could probably say that Ralph Lauren is a luxury brand, right? Would you guys say that Ralph Lauren is probably, considered luxury brand, you think? I would consider a luxury brand. Yeah, Tress Boston says, Tom, I think luxury brands will do fine. I think I agree. I think you're right. Gary Carpenter, good to see you. Chris is with housing being a seller's market. I don't see prices going down, says Chris. So you don't think we're gonna have any price declines in real estate, you don't think? Interesting. Now, I told you guys what I did already, and we sort of covered this during our New York City live streams. Now, I have almost every single one bedroom, one bathroom apartment in New York City price ranged between, I would say, $350,000 and $800,000 saved on my Zillow account. And almost every single one of those have a price decline anywhere between $25,000 and $55,000. So I think the price declines are just starting. And the trend is usually this, right? What I usually like to look for is the National Association of Realtors as they release their existing home sales. And you'll usually start to see them decline rather rapidly. And that's exactly what we're seeing. And then next after that is when you see those big price declines. Ooh, the wind is picking up like crazy down here. We just had a little bit of a rainstorm here in Miami too. This is a cool place. It's like an indoor, outdoor style bar. Really unique. Walking Minnesota says realtors on my IG are definitely getting more desperate. Yeah, I mean, it's definitely getting harder to move real estate. Definitely is. You're having a lot of contracts canceled too. And we talked about this as it relates to a lot of the single family home builders. All right, everybody. So really quick, tomorrow, Diamondback Energy is reporting earnings, okay? And I think that's going to be the one we need to watch, and I'll tell you why. So obviously we know tomorrow I may not be doing a live stream. I will be attending the Miami Economic Conference with Ken Griffin, Citadel Securities, and Mayor Francis Suarez. So I may not be doing a live stream. But if we don't, please take a look at Diamondback Energy, because a lot of these oil and gas companies have been outperforming the market, I would say, with some really, really massive amount of force here, right? So much so that the Biden administration and President Biden has come out here and essentially saying that they're taking advantage of the situation, but we won't get into that. We won't make it too political, but I want to bring a couple things to your attention, okay? If we think back to last week, or over the past couple weeks, we heard from ExxonMobil, we heard from Chevron, and some other oil companies, and profits and revenues were up massively year over year. Now take a look at ExxonMobil. If you take a look at ticker symbol XOM, okay, if you go to tradingview.com or something like that, if you go to ticker symbol XOM, and let me know if you guys can hear wind noise in the mic. I'm trying to avoid the wind as much as I can. So if you go to TradingView, look at a monthly view of ExxonMobil, okay? And you'll notice in 2014 is when the all-time record high was for ExxonMobil. And I think it was right around 104 bucks, 105 bucks. Now take a look at where we are at right now on ExxonMobil. We're almost about to breach, well, we're at a 52-week high, but we're also about to take out the all-time record high that hit on August of 2014. Okay, so a year 8 years later, I think we're at 112, so breaking a new all-time record high. And the reason why I think it's so important to pay attention to this is because when you have over 8 years of price consolidation and massive breakout on record profits, because oil companies are doing fantastic, the measured move on that is usually 25 to 30% on the breakout there. And the reason why I say that is because take a look at Chevron, okay, ticker symbol CVX. Very, very similar looking chart to ExxonMobil, but it's actually a little bit further ahead of where ExxonMobil is right now, breaking a new all-time record high and up 30% from its 2014 breakout. So if you look at the XLE, which is the spider ETF that tracks the energy sector, if we continue to have record earnings reports in the oil and gas sector, this is going to take the XLE to new all-time record highs, especially if we can have crude oil get back to $100 a barrel. So I just wanted you to be cognizant of that. This week we're going to hear from a lot of oil and gas and energy companies. Hey, Psychic is here. Says, hey Tom, I'm watching the stream while baking cinnamon rolls, enjoying the pleasant evening. Well, could you save one for me? Oh, look at this dog. 9 out of 10 on the dog. 10 out of 10 on the dog, actually. Ron McAllister is here. Says, evening, Tom. Good to see you, Ron. Welcome. UniJ22 says, hey, Tom and chat. Good to see you. Corvette Girl, welcome. Mike Skate TV is like, Tom, is that your new ride? I wish, man. I wish. Jason Francis is here. Good to see you. So this is where the Publix is. I've never been in this Publix, but supposedly it's really nice. I usually go into the Whole Foods because it's a little bit closer to where the office is. Dan Zhang says, Tom, China just beefed up its zero COVID policy lockdown this week again. It could be very negative for the oil market. Yeah, so Dan, it's great that you brought that up. Because did anybody notice the release that came out from Apple? So Apple came out here warning of inventory shortages on their iPhone 14 product lineup. And it's just so coincidental that it comes at a time when China, to Dan's point, is ramping up their zero COVID policy nonsense again. Now, and I think Apple actually did come out and say, due to the uncertainties with the zero COVID policy, we're probably not going to meet the demand for iPhone 14 production. And this is very critical because what are we headed into right now, everybody? This is the holiday sales time, right? So if demand is already at record highs for the iPhone 14 and the iPhone 14 Plus, and inventories are already at record lows, and now we are going into a zero COVID environment again, as it relates to the zero COVID policy in China, that could negatively impact Apple's Q4 earnings report. So I think we're going to continue to see this trend, and I think we've already started to see it, especially with some of the big semiconductor companies, with reshoring the supply chain. So what I mean by that is, if C-19 taught us one thing, it's that we cannot be dependent on other countries for our supply chain, right? And it's very, very difficult to manufacture a product or a service, right? A distributed service, if the political environment in other countries are so unstable and so unpredictable, it's hard to manage a business. So I wouldn't be surprised if we see Apple further ripping away some of the manufacturing capacity from China and moving it to places like India and even maybe the United States. It's a good point. Sparks Carnival says Qualcomm had a bad week last week. Yeah, and you notice all of the semiconductor, the chip companies that reported so far are reporting a steep decline in demand. So they're saying, and I think this came from AMD's earnings report. So the CEO of AMD came on the call and said something along the lines of, we're seeing customers not ordering new inventory. The customers just wants to burn through all of their existing inventory before placing new orders because the macro environment is so uncertain. Now, we sort of talked about this, especially as it relates to a lot of these semiconductor companies who manufacture chipsets for PCs and even phones. And the reason for that is because if you think about what happened in 2020 and 2021, as it relates to IT spending, specifically in the Chromebook market, the connected laptop market, I'm estimating there was probably about a 5-year pull forward in that spending. There was a ton of COVID money that was being tossed around here. And a lot of these large governments, school districts, local municipalities put in a major purchase orders. I'm talking about multi-million-dollar purchase orders for connected devices. So we already saw an article that came out in the Wall Street Journal interviewing one of the major superintendents for a school district in New Jersey. And he said the exact same thing. He's like, look, we're pretty much good. I mean, we spent all of our money on Chromebooks, on connected laptops. There's no need to order anymore. So I think we had a huge amount of pull forward, huge earnings spike, and now I think we're gonna go sort of a mean reversion here. But it's a good point. Jonathan Richards is here, says, hey Tom, what's up, Jonathan? Good to see you. Always a pleasure. Happy Sunday night to you, my friend, and happy midterm election eve. Steve CR says, GM Ford has a problem. Do they come out with only electric cars, or do they keep selling gas models? Well, I think the government's not even gonna allow them to sell gas models anymore. Diana is here, says, hey Tom, always enjoying your videos. Thank you, Diana, appreciate it. Lena Sandoval is here, says, hello Tom, good to see you. Tahoe 814 says they are building a huge chip factory in Ohio right now. Yeah, so I think they're investing something like $1.8 billion into building those new chip foundries. Now, here's the thing. It's going to take a long time for them to come online, right? I also think there's a main chip factory being built in upstate New York in Syracuse. Now, I forget which one it is. I'll check out the Metro Mover coming by. I think it may be Qualcomm, I think. But they're building a massive one in Syracuse, New York. Hey, Natalie is here. This is Little Ferry, New Jersey. Good to see ya. Resumes is here. Says, hey Tom, beautiful in Miami. Ah, very cool. Very nice. Oh, Tom H, it's Micron. Thank you. Which is very good news because upstate New York, and I'm not taking a shot at upstate New York. I love upstate New York, it's great. But if you compare it to downstate New York, right, like Long Island and New York City, the 5 boroughs, in comparison, it is very economically depressed. So I think it's very good. Dusty Cole is here. What's up? Good to see you. Thanks for joining. So also coming up on Monday, everybody, the Federal Reserve is going to report consumer credit data for September. Now, this is going to be a pretty big one because if you think about what happened in August, this is one of my favorite restaurants over here, by the way. This Argentine restaurant. In August, total consumer debt rose at a seasonally adjusted annual rate of 8.3% to a record of $4.68 trillion of revolving debt. Primary credit cards jumped 18.8%. And this could be a couple things going on here. Inflation could potentially be really eating away at a lot of Americans' pockets, so they are resorting to spending on credit cards and paying the minimum payments to try to make ends meet. But here's sort of the good news so far. And we talked about this as JP Morgan reported earnings, the Bank of America reported earnings, pretty much all the major credit card issuers reported. What they're showing so far, now I'm not saying this can't change, but so far, if you talk about delinquencies, all right, a 30-day and a 90-day delinquency, we're not really seeing too much of a material uptick in those delinquencies. If you look at pre-pandemic levels, we are actually, I think, below pre-pandemic levels as it relates to credit card delinquencies. So people are still paying their debts. We're not seeing defaults, we're not seeing delinquencies, which is good news. But as the Federal Reserve continues to raise interest rates, well, for somebody who's holding a balance on that credit card, you know, those balances can compound rather quickly. So if I had to offer a piece of advice, it would be to immediately in this environment, pay down your highest interest rate debt, especially credit cards, and pay down the lower interest rate debt the last. This looks like, what is this, a French Bulldog? 10 out of 10 for the French Bulldog. CM says Apple depends on the Taiwanese giant Foxconn. Yeah, and the problem with Foxconn is the working conditions are so egregious that they have to put nets up over the windows so the employees don't jump out. That is really dystopian. All right, so at the end of the block, we're gonna make a right. And then let's head to the Panorama building. But right now, this is Brickell Village. You know, another company that reported a good quarter was Starbucks. Now, Starbucks ticker symbol SBUX. It seems as if every time that Howard Schultz is in charge of the company again, it starts to do great. I think they added a record amount of mobile subscribers. So if anybody is a member of the Starbucks application, I think they now have a total of like 23 million people that are signed up members of Starbucks. And this is amid about an 8% hike in prices across the board at the company. So even though that prices at Starbucks are up roughly 6% year over year, they continue. I think this guy's getting arrested. Same store sales are up about 7% globally. And that is even amid the zero COVID policy in China, in which case Howard Schultz actually came on the call and said, China has been a little bit of a headwind, but they are optimistic for the future. My friend Ed T is here. Hey Ed, Cindy Foley, appreciate you. Rich Child says, I'm so excited about this week. Also checked out Ken Griffin's background and history. Can't wait to hear about Monday's event. Rich Child 9, I can't wait too. I mean, I'm really excited. So the Economic Club of Miami is hosting this event. It is going to be in downtown Miami tomorrow. Now the event does end at 7:30, so we do go live at 8:30, but selfishly there is a networking event at the conclusion of the keynote speech, and I think it would be a really good opportunity for me to participate in that. You know, I'll get to meet the mayor, I'll get to say hi to Ken Griffin from Citadel, but I will be posting either a wrap-up on the community page or in the Behind the Street newsletter. So stay tuned for that. Okay, so Resume says Starbucks says that they have sales so strong that people are not buying the standard drinks, but they are getting all the bells and whistles. I saw that too, which was really intriguing to me. Now, resumes, there was an interesting article I think that you should probably read. I think you'd find it really interesting. It was in Barron's this weekend, and it was all about consumer spending habits, right? So they ran a lot of data at some of the major credit card issuers. And one of the things that they said is that consumer spending is not necessarily going down, right? Consumers are just reappropriating their spending to more services and events like going out. That's why the airlines are seeing an uptick in revenue. You're seeing, did anybody, real quick segue here, but did anybody see, I'm trying to think of the company's name. I think it was Booking Holdings and also Open Table. I think the CEO of Open Table came on and made a statement and said that he is seeing record amounts of reservations across his entire website. So people are eating out in this environment while we're talking about the economy going into structural decline here, right? You have the ISM PMIs rolling over. You have pretty much every major economic metric rolling over, but consumers tend to be pretty resilient in wanting to spend on services and travel. And I think that's because you have about 2 years of pent-up demand due to the COVID virus. So it's a really, really interesting time we have. Really, really interesting. Hey, Wendy England is here. Good to see you. Rich Child 9 says great networking opportunity. Yeah, I think it's going to be cool. One of the things I'm most interested in hearing about at the event is Ken Griffin's sort of plan for the future of Miami, right? And I would say Florida in general, because here's some of the downsides that have historically plagued Florida, which has really been wage growth. So the jobs historically here in Southern Florida tend not to pay as good as jobs in New York and in the Northeast. That's pretty well known. I think now with a lot of the tech innovation that is coming here to Southern Florida, I think a lot of that is going to start to change, but it's not going to change unless we have a lot of strong entrepreneurs investing a lot of money and recruiting top talent to Florida. Now, here's one of the main reasons why I think the Northeast and places like Silicon Valley out in California have had a pretty strong hold on talent, and that is due to the educational infrastructure. I mean, think about all of the top schools and the universities that are in the Northeast, right? Especially in and around New York City. You have the major Ivy Leagues, you have Columbia University, you have Cornell, you have Harvard up in Mass, right? Dartmouth, Yale. So a lot of the institutions or the educational institutions have been fantastic feeders into some of the top paying sectors. Like, right, if you think about New York, you think about Wall Street. If you work at an investment bank, chances are you probably went to a top 50 school. Not in all cases, but most cases, investment banks tend to recruit out of the target schools, which could be anything from an Ivy League institutions or, as they call them, the top 50. So I think if Miami really, really wants to make a mark and attract top talent, you're going to need to 10x the investment on education. And I think it's going to be a slow and steady process, but I think it'll happen. I think the education system here is going to get better. Hey, Hemi Power says, hey from Miami, love your videos, very educational. Good to see you. A local native in Miami. Beautiful night tonight. I'll give you guys one more look at the Jack Daniel's Christmas tree here. Nicholas Duras says, Tom, what is your reaction to Miami having the lowest crime rate it's had since the 1930s? I did not know that, but I'm obviously happy about it. Definitely happy. Anytime that there's peace and prosperity, I'm all about it. So everybody, Tuesday, let's move right along here. We covered Monday, now let's go to Tuesday. So Tuesday, November 8th, this is the big day, okay? Big day in the United States. This is our midterm elections, okay? There's gonna be a lot of stuff happening. The market's gonna be very, very volatile. So one of the things I'd say about midterms, just aside from the stock market and aside from investing really quick, there's gonna be a lot of nasty things happening. Especially on social media platforms like Twitter, really anything, even LinkedIn. It's just going to be a big horror show. It's going to be a mess. So if I could offer a piece of advice, it would be just don't engage in any of the political nonsense come Tuesday, because there's going to be troll farms out. There's going to be people that are just trying to stir the pot, and it's not worth your time. You want to be focused on the goal, or keep your eye on the prize, as they say. So don't engage in any political discourse, because I think about a good 70% of it on Tuesday is going to be from antagonists and trolls and bots. Anyway, so interesting companies reporting earnings on Tuesday. Constellation Energy. So an interesting thing about Constellation Energy, and I'm not sure if anybody knew this, and I think we need to keep our eye on this company. I believe they are the largest producer of clean energy in the United States. And I think this is one of the oldest bars in the world. I mean, in the United States, by the way. Kush by Tobacco Road. I've never been in any of these places, but they seem rather interesting. So Constellation Energy, they are the largest producer of clean energy in the United States. Now, they specialize in nuclear, hydro, solar, wind, and obviously natural gas. And running along the thesis that I think energy is, in general, oil and gas, energy companies are going to continue to blow it out of the water as it relates to earnings. I think Constellation Energy will be no exception. Now, a major chemical producer is also reporting. DuPont Chemical. I'm not sure if you guys are familiar. You probably are. Ticker symbol DD. I think they're going to have a great quarter. I actually do want to cover them in detail, but if we're not streaming, I think we should be streaming that day. I'll probably do a big deep dive. But if we take a look at the Dow Jones Industrial Average, okay, the Dow 30, the Dow Jones is made up of 30 very, very large cap stocks. Now, I think about 90% of the companies in the Dow have already reported earnings, but there is one that hasn't. So does anybody want to take a guess at the one company, or I would say the main one that I'm concerned about, that hasn't reported earnings and they are reporting on Tuesday? I'll let you guys take a guess as I show you this beautiful view here of Miami Tower. So this is the City National Bank building. It glows all different types of colors. I'm not really too sure why it's lit up in orange today. Hey, the Dow Jones.eth is here. What's up, my friend? Good to see you. Hey, Mel J is here. Good to see you, Mel. Welcome. Sparks Carnival, you're right, Disney. Yeah, so Disney, ticker symbol DIS, will be reporting their quarterly earnings report on Tuesday. Now, I want to give everybody a quick reminder of what happened last quarter. This is my favorite Metro Mover station, by the way. You have an amazing view of, I think this is the Bright Line. Maybe we'll actually go on it today. Who knows? Anyway, so last quarter, which I was really, really impressed, and I wrote this down because we reviewed it on the live stream 3 months ago. The CEO of Disney came on the call and said that we had record revenues at our parks. So the Disney parks, right? Disney World, Disneyland, you get the picture. But there was one key thing that they said that was so mind-blowing. They said, oh, I thought he was going down a one-way. I'm getting all confused. Anyway, he said that there was record revenues at the Disney parks and resorts, and they're not even operating at 100% capacity because they still have different COVID restrictions and things like that in place, which is understandable and we get, but still, even though the park is not operating at 100% capacity, they had record revenues. So could you imagine if they let loose and blew the doors off the place and operated at 100% capacity? imagine what the revenue would be. Play devil's advocate, somebody came on that live stream we were doing and said, well, maybe there's record revenues because they're doing some crowd control and users are having a better experience going to Disney World and Disneyland because they're not shoulder to shoulder and it doesn't take 5 hours to wait on a ride, which is actually a good point, and I didn't think about that. But so I'm interested to see the revenue growth in the Disney parks, theme parks sector. But I'm also going to be looking at the Disney Plus, which is their streaming service as they compete with Netflix. Sparks Carnival says Disney does not have full capacity. Laytha says hello, Tom, and everybody in the chat. Good to see you. Steph UH says huge price increases at Disney. Now, does anybody know what's going on with I think there was a lot of issues with the Disney Pass. It was like an everyday pass or something. Zozo Bob says that's the Metro Rail, not the Bright Line. I always get confused with all of these trains. We have the Metro Mover here, we have the Bright Line, and we have the Metro Rail. I never remember which one is which. Hey, William Brooklyn is here. Says come on, hit the like button. Thank you, William Brooklyn, I appreciate it. If you guys are enjoying the live stream, feel free to leave a like on the video and hit the subscribe button if you're new. We do these live streams about 5 days a week between New York City and Miami, and we'd love to have you along for the ride. So this is the Northern Trust building, and I think we have a full moon out tonight. It looks amazing, this moon over Miami. Deep Value Alex is here. It says hello to all. Good to see you, Deep Value Alex. Trust you're well. So Sparks Carnival says, Tom, Disney Plus might be disappointing. Roku has had a massive dive last week. They should be concerning for Netflix and Disney's ad-supporting subscription plan. Yeah, and I mean, so my whole thing, and it's a great comment, by the way, but my whole thing is this. The streaming sector is getting so crowded. You know, there was a great article in Barron's this week that actually covered Pershing Square. So Pershing Square is Bill Ackman's hedge fund. You could actually purchase it. And it's trading at all-time record low levels to net asset value, right? Maybe we'll go into that a little bit later, just so we don't get off topic. But Bill Ackman and his team at Pershing Square, I think they lost about $400 million over the course of a couple months on their bet into Netflix, so Reed Hastings' company. And I think the stock may have dropped 20% overnight. Now, to be honest, the stock has rallied, but I don't know if this rally is going to be sustained, because here's my issue with the streaming providers. It was good when Netflix had its first mover advantage, but I think that is long gone now. So right now you have thousands, to exaggerate, of streaming services. You have Disney Plus, you have Peacock, you have HBO. I think now Amazon has one, maybe like Amazon Prime Video. There's so many, right? Now, to sort of play devil's advocate again, so this is 600 Brickell really quick, and they put up this massive Christmas wreath, but I don't think the lights are on tonight, unfortunately. And they also put the Christmas lights on the big palm trees out here outside of the W Hotel. Yeah, Kevin Ramsey, you're right. There's too many, but there was a research report out of the Wall Street Journal, which I think we may have covered already. But people are canceling cable TV in record numbers, right? We know that. And the average American household has anywhere from 3.5 to 4.5 subscription services, because, I mean, if you're paying, $12 for each one, that's the exact amount you would pay for cable TV that nobody uses. So you might as well cut the cable, and maybe the kids could watch Disney Plus. You guys could watch Prime Video and HBO or something like that. You get the picture. But even with all of those, my biggest problem with all of these is we're developing a trend that once your show that you like to binge watch is over, you just cancel the subscription. And I think a lot of these streaming providers and streaming services are noticing that. And I think that's gonna be a problem that they need to address. Because let's say you subscribe to HBO just to get Game of Thrones, right? But once Game of Thrones is over, you just cancel the thing. So it's very hard for analysts to evaluate those businesses because the churn rates are all over the place. We are now looking at the W Hotel and Tower, one of my favorite buildings in Miami. Yogi's like, that's what I do. Yeah, exactly, man. Noodle says Tubi TV is great, no subscription and ad-free. It's for a lot of 80s and 90s movies. I didn't know that. Tubi TV, interesting. Mike C says, Tom, we are thinking of seriously cutting YouTube TV. So is YouTube TV the same thing as the YouTube Red or something like that? Joseph Hardaway says, I still buy movies from Apple TV. I don't even watch or stream. Brad's Brain says, my current Hulu account is going up to $75 in December. Whoa. Dan Zeng says, Tom, you're so right. I signed up for Showtime to watch Billions only. Yeah, so does anybody have any ideas? And not to sort of beat on this like a dead horse, but these companies are going to need to address that. I mean, they're just going to need to address that because here's the thing. They're trying to make it sort of like a SaaS business, right? So SaaS is software as a service. Now, I know that these streaming companies aren't software businesses, but I'm talking about the subscription-based revenue. So you're ringing the register every single month. So Wall Street tends to assign a higher premium to those type of companies, these software companies, because number one, software companies tend to have extremely high gross margins. Okay, that's number one. But number two is they have very, very predictable revenue streams. Okay, so if you're signing up for a piece of software that's $10 a month, just to have an example, and your churn ratio is extremely, extremely low, so almost virtually no people that sign up churn, well then you're going to have a crazy valuation or a higher valuation than a traditional business that doesn't have those predictable revenues or cash flows. So I think these streaming services are going to need to come to terms with this and say, look, we're either going to have to lock these customers into a contract or make some sort of cancellation fee. I don't know. It's going to be interesting. Yeah, Maxwell says VPNs plus pirate everything. Yeah, I mean, I don't know. I'm against that, but Deep Value Alex says, do you know if the conference with Ken Griffin is going to be recorded? Also, rain is coming. Time to get the umbrella. Ooh, yeah, we'll have to do that. So I don't think it's going to be recorded, but I probably will record it if I have permission. But if it's not recorded, I'm going to write about it in the Behind the Street newsletter. So if you guys want to sign up for that for free, if you scan the QR code on your screen and punch in your email, I do write a free investing newsletter for the group. And I'm going to write a piece on the Citadel Securities founder, Ken Griffin, as he does his keynote speech at the Miami Economic Conference. So if you want to sign up for that, just scan the QR code, punch in your email, and you will be signed up to receive it. We usually write about the US equity market, emerging markets, fixed income, real estate, all that good stuff. I think that's the first time I ever saw a street sweeper in Miami. I guess that's why the roads are so clean. All right, so moving right along here, we covered a lot. So just to quickly recap, Tuesday, we're gonna have Constellation Energy, and they are the largest producer of clean energy in the United States. They specialize in nuclear, hydro, solar, wind, and natural gas. So they are reporting Tuesday. Occidental Petroleum is also reporting on Tuesday, which is going to be midterm election day. And here's the interesting thing about Occidental Petroleum. So Warren Buffett just made a huge investment in Oxy, so ticker symbol OXY. And all of these oil companies have very, very similar charts. We talked about ExxonMobil, we talked about Chevron. All of them are going gangbusters, breaking to 52-week highs and also all-time record highs. So if you're long the energy sector, maybe long the XLE, assuming that crude oil stays elevated and these companies that are reporting this week blow out their earnings, I think we could see a new all-time record high in the Spider XLE ETF. We'll see. So keep an eye on Occidental Petroleum there. But that brings us right along to Wednesday. I think Wednesday is probably going to be the slow day before Thursday, which is the day that is going to be the most highly anticipated day on Wall Street. But Wednesday we are going to hear from Roblox. Now, I'm assuming, and I never want to assume, but for anybody watching the live stream that has kids, okay, or maybe even if you just use it yourself, I don't discriminate. Thoughts on Roblox? Now, the company is, let's just say I wouldn't buy it in this environment, but just for some market research here, anybody who has kids or anybody who maybe has nieces, nephews, cousins, any thoughts about Roblox? Are the kids still obsessed with it? Yeah, Sparks Carnival says Roblox. Oof. Dan Zhang says, God, my 3 youngest cousins are obsessed with playing it. They are playing it on their iPads all the time. Wow. So, that may be good or bad news depending on who you're asking, but for investors, it's good. Mr. W says Roblox is the legacy. Yogi says, Tom, every kid knows about Roblox. It's their Pokemon. It's a great brand. Interesting. Didn't know that. JC Trades is not as much as they used to. Noodles says, Tom, my kids don't play Roblox as much anymore. Interesting. Explode V2 says, quick question. I got laid off a year ago. Oh, I'm sorry to hear that. Do you know any quick jobs I can get by? Well, I guess it just depends on what you want to do, right? I guess I would start by asking, what profession were you in that you unfortunately got laid off in? But I would just start applying to all companies, in my opinion. Hey, Blues Writer, thank you so much for the $5 donation. You were too kind, my friend. It says, congrats on 24,000 subscribers. Tom, please use this to buy a Powerball ticket. If you win, move and declare Florida residency. Blues Writer, I appreciate that, man. Yeah, so quick segue to Blues Writer. Very kind of you for the donation. I appreciate it. But isn't the lottery now something crazy like $1 billion? I think it may be over $1 billion, right? Now, I'd never played the lottery before, but isn't this a new record, having it be $1 billion? I don't think it's ever been $1 billion before. Holy crap! Chris Hensley says it's 1.9 billion. $2 billion? Holy crap, man. That's ridiculous. I didn't know that. I didn't know it was almost 2 billion. Now, here's what I'll say about that. Oh my gosh, it is so windy here. All right, we'll wait for the wind to die down. So here's what I'll say about that. The real winner is definitely the IRS. Because assuming, let's say if you win the $2 billion, half of that is going to go to taxes. So whoever wins that is, the government wins in the end. Brad's brain says I'd retire early if I win the Powerball. I definitely would too. I think it's going to be too windy to go over there. I think you guys aren't going to be able to hear anything. So we'll walk this way. I think I have to get a new microphone. The mic just doesn't work for whatever reason. I don't know why. Yeah, Brad's brains is actually half goes to you. I'm down. If you, I don't know if I'll play it, but maybe I'll buy one. I'll take you guys across the other side. All right, so yeah, I just want to get some information on Roblox. You know, they are reporting earnings. You know, this whole big trend with the metaverse seems to be maybe dying down. You know, Mark Zuckerberg has a huge bet in it, but you know, as Peter Lynch always says, the best form of market research, to use his words and not mine, is to go to the mall with the wife and kids and see what the kids are interested in these days, because the kids and the younger generation is going to propel much of the spending over the next coming decades. And I think, you know, paying attention to Roblox and the trend is going to be a big indicator if this whole metaverse thing is going to work or not. So they are reporting on Wednesday. Also, the trade desk. So the trade desk, I think, is going to have a really, really bad quarter. And why do I say this? Well, we covered Snapchat on the stream. We covered pretty much, you know, Meta. There's another one. Alphabet, Google. And they also, and all of them, I would just say, maybe to quote Snapchat here, take a look at this lobby here. This is insane. This is really, really nice. I think this is probably the most Miami type of lobby I've ever seen. Everything is just stark white. Really beautiful. Really unique chairs with this chess set here. Would you guys agree, is this probably the most Miami lobby ever? Just white everywhere. And whatever that is that a rhinoceros? Strange. Oops, let me cross here. When it rains in Miami here, everything is like, it's almost like ice skating. It's so crazy slippery. Yeah, Deep Value Alex like seems nice, probably never used. I lost my train of thought, I apologize. I'll pick it up. It'll come back to me. Oh, the trade desk. Yeah, so we were talking about Snapchat. So Snapchat's earnings was really horrible. So the CEO of Snapchat actually came on the earnings call and says the vast majority of the advertisers that work with Snapchat are either in the process of cutting back on advertising spend or are putting together strategies to cut back on advertising spending. So I think the trade desk is going to have a bad quarter. Obviously, as we almost have every single company that has reported has said, yeah, due to economic uncertainty, we're going to be pulling back on spending. Due to economic uncertainty, we're not going to give forward guidance or revenue projections. So I think it's going to be a big bomb on earnings there. $56 is the cash value. Value will be $929 million. Oof. It's a big payday for the IRS. Joan K is here. Says, hey Tom, what's up, Joan? Good to see you. Appreciate you joining. Hey, Sivas. Hey, Tom. Hello from India. I love Roblox. Interesting. Yeah, I think I'm going to be on that quarterly earnings call. Obviously, I don't own the stock. I probably think I never will, but just to sort of keep tabs on the trend there. We'll see. Now, the biggest day that we need to watch out for is Thursday. Because Thursday, we are going to hear from the Bureau of Labor Statistics as the CPI numbers are released, okay? So the Consumer Price Index, or the inflation data, will come out on Thursday. Now, it's interesting because I think if the CPI report came out before midterms, I think that would really shift the decision one way or the other. But I don't know, I just wanted to sort of make that note. But the Federal Reserve has already signaled that they may slow the pace of interest rate hikes in the future. Okay, so as of now, the Fed funds rate stands at 3 3/4% to 4%. Okay, and that is after the 75 basis point rate hike that we got last week. Now, here's the thing that's concerning, and I think where a lot of people are misinterpreting this data. And it comes from a very interesting statement that Federal Reserve Chairman Jerome Powell said at the last meeting. And I want to read that for you guys, because I think the context matters here. But really quick, I just want to show you Bank of America Tower. This is 701 Brickell. So you have Bank of America, Merrill Lynch. But Fed Chair Jerome Powell, and he said, and I quote, "Incoming data since our last meeting suggests that the ultimate level of interest rates will be higher than previously expected." Okay, so that means the projection for 2022, he thinks that they're going to need to raise rates even higher. So even though the Fed may not raise rates as fast, they're going to get there one way or the other. And if you notice, the reaction to the rate hike was actually positive. The market was up. And then once that came out of Fed Chair Jerome Powell's mouth, I mean, you just had a bloodbath across Wall Street. All the mega cap tech stocks were down. Pretty much every single stock on the exchange was down except energy, oil stocks. So even though they may slow the pace of these rate hikes, I think the most important thing is how high they're going to go. Because they could raise interest rates by 25 basis points, but if they raise the Fed funds rate to 20, it's still going to cause a ton of damage. Now, I'm not literally saying they're going to raise it to 20%, but I think you guys understand what I mean. Hey, John Sorley is here. Hey, John, good to see you. Welcome. Let me know if you guys hear any wind noise in the mic. Yeah, Gary Carpenter says you can hear the wind. It's crazy windy tonight. Let's make a right and cross 8th Street. But this is the bridge to Brickell Key, and I took you guys here on last night's stream. All right, we'll wait for the light and we'll cross here. And I want to show you guys, this is the tallest residential building in Miami, the Panorama Building. So the Bureau of Labor Statistics is going to release the Consumer Price Index for October. Now, consensus across Wall Street of all the analysts that were surveyed are projecting about an 8% increase year over year. Now this follows an 8.2% increase in the CPI from September. So if we do get the 8% increase, this is actually some good news. It's not good news because 8% inflation is ridiculous and it's unacceptable. But the good news is that it's decelerating from 8.2% to 8%. But I would say the main number that we need to focus on is not so much the headline number, because that number does not take into account what the Federal Reserve is actually looking at, and that is the number called the core CPI, which excludes volatile food and energy, which has also been on the upward trajectory as well. Now, I think projections for the core CPI, which excludes volatile food and energy, is going to come in at 6.5%. Still horrible. But I will say this. If we come in above 6.5% for core CPI, I think all bets are off and we are automatically going to get another 75 basis point rate hike. So I think Thursday is going to be the day to watch. I think much of the trading activity and volatility will happen on Thursday as we get those numbers released, because that's going to be a big key in to see if the Fed is indeed going to slow the pace of rate hikes or not. You know, for some reason, I really like this building. This is 950. I don't know, I sort of like the look at it. I think I just like the palm trees in the front. Wendy England, what's up? Good to see you. Sparks Carnival says WeWorks reports Thursday also. Still bullish. Well, I wouldn't say I'm bullish. I would say that I think COVID saved the company, but I think the company still has a long way to go. I think they're very well positioned, and here's why I sort of say that. You know, this week there was a really interesting article in the Wall Street Journal as it relates to ExxonMobil. And what the article stated is that ExxonMobil is trying to cut costs anywhere they can. And in their main campus, I think it's their main Houston campus, they're actually actively looking to either sell their main office space or lease it to somebody else. And this is a growing trend across major companies here in the United States, because what did COVID teach us? That everybody could just work remotely. So there was a study done internally at ExxonMobil, and it showed that even now, with everybody going back to the office, or I'd say everybody doing hybrid work, they're utilizing less than 50% of the office space. Okay, so why do you need to have all of these massive buildings and all these expensive leases eating into your capital expenditure when you could maybe just have your employees work remote, or get a little teeny office in the WeWork building and you could share the space? So that's sort of my bull thesis there. I wouldn't say I'd go out and buy WeWork, but I'm definitely going to be tuning into the report for sure. I just think that a lot of companies are going to be looking to dump a lot of their office space because they just don't need it. All right, here's an up close. Wow, this looks taller than I expected. Sparks Carnival says, Tom, Goodyear Tire had a horrible earnings report last week. This is because workers are not driving to the office as much, so there's not as much wear on the tires. That is crazy interesting to think about. I never would have thought about it like that. It's a good point, though. Wow, yeah. Holy crap. Interesting. Julie M says, my boss is having me do an office utilization chart for our offices. Yeah, exactly. So, I mean, yeah, let's just say I'm very bearish on big commercial real estate. Hey, what's up, man? Good to see you. Thanks so much for watching. Appreciate it. Hey, that's cool. So here's the panorama tower right here. And since we're over here, we might as well walk over to Ken Griffin's, I would say, official office groundbreaking space if it's not too windy. You guys can see the wind. Jeez. Oh my God, it's probably a good 25-mile-an-hour gusts here. I think this may be my favorite street in all of Miami. Look at how amazing all these apartment buildings are. Could you imagine having a balcony looking over the bay here? Insane. So Blues Rider, I heard about that on Twitter, man. So Blues Rider says, Tom, I heard United Airline pilots turned down a new contract. Strike may happen over Thanksgiving. Have you been following? I haven't been following, but I saw that today on Twitter. I'm trying to think of the guy's name. I think it's Investor Pilot. I gotta look. If you guys follow my account on Twitter at Walks Wall Street, I think I retweeted the statement that he put out about that exact topic, that there could be a strike over Thanksgiving for United. Now, if anybody's looking for a career, right? Maybe you're in college or something like that, high school, or maybe even a career change. I think the most stable job you'll ever have that is in extreme high demand right now is pilots. There's a massive, massive shortage of pilots right now. And it's a pretty lucrative paying career too, depending on who you fly for. You know, back in the day, I used to have, I think it was a kid I went to high school with, and his dad used to fly for UPS. And they were doing rather well, so. James Tiger says, Tom, Apple cuts outlook for iPhone shipments. How is the market going to react? Yeah, I mean, we talked about that. I think that's mainly due to the zero COVID policy over there in China. And I think how Apple is going to react is they're going to be forced to remove a lot of their manufacturing capacity away from China to places like India. And I think that trend is going to continue. Alright, it is crazy windy out, but check this out. I think this lot, this vacant lot, is where the brand new Citadel Securities office tower is going to be built. Pretty nice location, it's right on the water. And their employees definitely have the, let's say, the lion's share of apartments to choose from. Josie says, I heard the news that Twitter will have a $7.99 subscription in the near future. Yeah. So I think that's for the verification. So if you sign up $7.99, you get some perks like long form video, things like that. And it mainly is supposedly going to go towards cutting down on a lot of the spam bots, which I think will be good overall. I'm not sure if I would pay $7.99 for it, but we'll see. If they allow me to put long form video in 4K on Twitter, I think I may do that. I think that's worth the $7.99 because then I could put more long form stuff out. Yeah, Julia M's like, it sounds like you're doing a broadcast in a hurricane. It is crazy windy out tonight. I think we're actually getting a mini rainstorm through soon. So everybody, we're almost pretty much done with earnings season, thank God. So 87% of companies in the S&P 500 have reported earnings so far. And Q3 GAAP earnings are down 8.4% year over year. It is the second quarter of negative year over year declines. So over time, generally, corporate earnings in America will be on a trajectory higher, right? But you have some years where corporate earnings go down, and you have multiple years where corporate earnings may go down. But I would say this: if you do your research and look at a year-over-year earnings chart, oh, check out this dog here. In the S&P 500, I think in 2020, year-over-year earnings were down 60% for obvious reasons due to COVID. This is the JW Marriott house. You know, in New York, when we do our New York live streams, we always walk past the JW Marriott Essex house, which is right at Central Park South. So in 2020, year-over-year earnings were down about 60%. And then in 2021, I think earnings were up like 230%. So maybe it's just we're having sort of what I like to call a mean reversion here. Because if you think about it, I think, in my opinion, the majority of all of this economic excess that we've been having has been due to massive, massive stimulus from not only the Federal Reserve, but also the fiscal side of the house as well. Massive amount of spending by our government, massive amount of money printing by the Federal Reserve, which has fueled a massive economic boom. But now that we are in the complete polar opposite of that, in which case interest rates are going up, a lot of that is subsiding, and a lot of these unprofitable tech companies that we talk about all the time, I would like to call, maybe I won't call those particular companies zombie companies, but a lot of companies in maybe the Russell 2000. Now, these zombie companies can only survive, their whole business model is predicated on suppressed rates. That's the whole business model. So the theory is you can constantly take on debt to service your existing debt because money is so cheap. But that's not the case anymore as interest rates go up. So I think that's why you've been seeing a lot of these stocks getting hammered. You've been seeing earnings declines. And I think the only thing that's really, really saving the S&P 500 specifically, the reason why I don't talk about the NASDAQ when I'm saying this is because earnings have been very, very good for energy companies, oil companies, which we talked about, you know, ExxonMobil, Shell, Chevron. These companies are killing it. And the S&P 500 has a relatively high weighting towards oil and gas companies. So I think that's the only thing that's saving the S&P. Now, if you notice, the NASDAQ never broke above its 50-day moving average and never broke above its 200-day moving average. It has been the laggard. And the index that's actually leading the market is the Dow, which is very uncharacteristic. And I think that goes along with the thesis of a value trade here over growth. So this is Brickell Avenue. I'll give you guys a shot of Brickell City Center in Brickell, or Mary Brickell Village from here. All right, so let's walk up towards the Wells Fargo building to downtown Miami, where I have to catch the bus. But if you guys have been enjoying the live stream so far tonight, feel free to leave a like on the video and hit the subscribe button if you're new. We do these walks about 5 days a week between New York City and Miami. We'd love to have you along for the ride. Love is kind says, any plans to visit Dubai? I would love to visit Dubai. I just don't know if I have the time yet, but I would love to visit Dubai. Yeah, FredEx Tom is out here brave in the wind tonight. Yeah, for some reason I tested my microphone today, but for some reason it's not connecting well. And I think that could be for multiple reasons, but I'll have to order another one off Amazon. Dusty Cole, what's up? So if we had to take a guess in the chat, and I think we always do this before the CPI report. Hey, Melissa White is here, so just tuning in. Good to see you, Melissa. Welcome. What would everybody's guess be in the chat where the CPI numbers are going to come in? So the consensus is for an 8% reading. That's going to be a decline of about 0.2. We had an 8.2% reading last month. So the LT Prods is 7.1. I'm going to guess, I think it's going to come right in line with analyst expectations at about 8%. But the LT Prod, you think it's going to come in at 7.1? I think the markets would have a heyday if that actually materialized. All right, let's walk this way. And since it's so windy, I think we're actually going to jump on the Metro Mover to go back to downtown. %8.2%. Twitch ASMR says 8.3. So a lot of 8.2s, a lot of 8.3s. 9%. Yeah, if it comes in at 9%, I think if it comes in anything above where analysts are expecting, number one, the markets are probably going to crater. And number two, we're definitely going to have another 75 basis point rate hike in December for sure. Steve CR says 8.6. Susanna H, good to see you. Says hello, Tom, welcome. Thanks for joining us on this windy Sunday night, pre-midterm elections. Hey, Nicole is here. What's up? Hope you're well. We just finished walking near the W Hotel. Now we are back at the Brickell City Center, where we will get on the Metro Mover here. Because I think if we walk over that bridge, the wind is going to be so crazy that I don't think we'll be able to breathe. Paul Medis is here. Good to see you. Welcome. So we'll get on at Brickell City Center station and take, I think it's 2 stops, right? Zozo Bob? Maybe 2 stops over. Meryl is here. Good to see you, Meryl. Welcome. All right, let us hope it's operational. Zozo Bob says you need to go to Bayfront Station. Copy that. So it's 2 stops, I think. Nicholas says, why wouldn't it be operational? I don't know. I don't think the escalator's working. So I thought for a second maybe it's not. Okay, so
The train to downtown is arriving. Stand back from the platform edge. Allow passengers to exit the vehicle.
hey, Mr. Alves is hello from Brazil. Welcome. Good to see all of our Brazilian viewers. So Zozo Bob, we're gonna get on this way, right? Hey, Techno Pink, what's up from the Dominican Republic? Good to see you.
Brickell City Center Station, Main Street.
I think this is going to be the best view here. But Techno Pink, good to see you. Techno Pink is our management consulting buddy from the Dominican Republic.
And hold the handrails. This train will depart momentarily.
Yeah, Mike Skate TV. This is Tom rocking the baseball cap. I also got to get a haircut. I'm out here looking like a college lacrosse player.
15th station. Please hold on. The train is approaching. 15th station.
Okay, two more I think after this one. Now the one thing you'll notice about the Metro Mover is all of the train stations are very, very clean. And I think that's because they're outside. And then this is what they look like inside. But the only thing is there's no seats on the inside, which is a little bit of a bummer.
Please hold on. The train is approaching. Riverwalk Station.
All right, Riverwalk Station, and then I think two more.
Riverwalk Station.
Passengers, for your safety, stand back from
Yeah,
the
Zozo
platform
Bob.
edge.
This station is 7 stories tall.
Passengers to exit.
That's ridiculous.
South Main Center Station. Transfer here 4. Midterm, Miami Avenue and Center Station.
The train is free, yes.
Please hold on.
So you can see Brickell in the background.
Next Center Station. Transfer here 4. Inner Loop, Miami Avenue and Government Center Stations.
I think this is where we got lost last time, so I think I'm just gonna stay on. So no, this is free. I'm seeing a lot of comments, you have to pay for it. No, it is free. Well, free as it can be, I guess. Tax dollars.
Transfer Pier 4. In the loop, Miami Avenue and Center Station.
So you could transfer to the other side.
The next stop is Bayfront Park Station. Please hold on. The train is approaching. Bayfront Park Station.
I think we'll get off here. All right, we made it. Okay, so this is right at the 200 Southeast Financial Center. This is actually where we work out of sometimes.
An inner loop train is arriving. Stand back from the platform
So from
edge.
here,
Allow passengers to exit the vehicle before boarding.
you can see the Intercontinental Hotel. And you can also see the Ferris wheel in the background. We'll go down this way. And supposedly, they are going to extend the Metro Mover all the way to South Beach, which should be good. Excited about that. That's going to be a big game changer. Now, here's the thing. It's probably going to take 10 years to do it, but I think it's going to be good when they do it. All right, so now we are back on familiar territory. This is the Central Business District here in Miami, and this is the 200 Southeast Financial Center. Wow, check out the moon in the top left-hand corner. All right, so let's head towards the Miami Tower. This is where I have to get the bus anyway. Front X is 8.5, I agree. Oh, check this out. This is a good view. Love the view of the American flag there. Audrey says the wind sounds insane. It's been insane all night. Crazy wind. And unfortunately we don't have the mic. I gotta order another one off Amazon. I think ours is faulty. I know Western Mass Dave's checked the clouds moving in. I think we're gonna have a pretty rainy day tomorrow. But we are coming up on the Whole Foods here, Whole Foods Market. And this is where I usually get the bus, about a block away. But I think we covered a lot tonight. So just in conclusion, big corporate earnings. Tomorrow we have Activation Blizzard. We have Solar Edge Technologies, Take-Two Interactive. Tomorrow the big news is the Federal Reserve is going to report consumer credit data. I think that's going to be critical to take a quick look into how the average American consumer is doing. Obviously, inflation is taking a big bite out of all Americans' budgets. But Tuesday is midterm election day. So there's broad-based elections here in the United States. I think that's going to move the markets. But we have Constellation Energy reporting earnings, which is the largest clean energy producer in the United States. We are also going to be hearing from Walt Disney, which is a big part of the Dow 30. That's going to be important. But if you could take one thing away from this live stream, it is going to be on Thursday when the Bureau of Labor Statistics reports the inflation data, or the CPI. So it's going to be an action-packed week on Wall Street, very, very busy. Once again, tomorrow I may not be live because I will be attending an economic conference put on by the Miami Economic Convention, where I will be listening to Citadel Securities' Ken Griffin speak to Mayor of Miami, Francis Suarez. So if I'm not live tomorrow, look out for a post on the YouTube community page, or if you scan the QR code, punch in your email, you'll be signed up to receive the free Behind the Street newsletter, where we write about not only the US equity market, but emerging markets, fixed income, and the like. I want to wish all of you a very, very happy and healthy start to the week. Good luck to all of our Democrats and Republicans out there as you are battling it out in the midterm elections. I hope we keep it civil and we keep it respectful. Don't get baited into any political arguments this week. And we will see you, if not tomorrow, we'll see you Tuesday. So thank you, Wendy England. Thank you, Layda. Appreciate it. Steve CR, Ed T, Dr. Longest, Dusty Cole, JR, Wendy England, Sabrina Fair, Tom Barry, Charlie Richardson, Mr. Wonderful, Mike C, Western Mass Dave, into the Mighty Bull. Have a good night wherever you are, because there is always a bull market somewhere. You just need to know where to look. If you guys are new here, feel free to hit the like button and hit the subscribe button. We do these live streams about 5 days a week between New York City and Miami, and we'd love to have you along for the ride. Have a great week, everybody. Get some rest, and we will touch base on Tuesday. Take it easy.